Morning traders, this is Paul with GammaEdge. Today is Wednesday, the 1st of March. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, market models, they're red. We could be in a whipsaw condition on the shortest of indications here. The cumulative tick close is less than the previous close. It's been in a downtrend. We had one day of up. Yesterday closed down. This is a whipsaw. We do have a new railroad track down pattern, so for all intents and purposes, as far as back testing, which has been very rigorous, this is a trigger day, and if you are following that, you may want to look into initiating a new down position, but again, we think we are long in the tooth here, so be mindful of the potential of a reversal. Don't make it very big. Long term, the ribbon is inverted. It is on the bearish side, and this means overall we should be selling the rips and going from there. So just be aware of that. Yesterday, the market breadth, as viewed by our 52-week new high, new low indicators, reflected another day where the 52-week new high outpaced the new lows. This is good. We like to see that. It's 2 consecutive days. Overall, 2023 has been really good. We have had a series of down days last week, and now it looks like we're trying to put a short-term bottom into that. We'll see what happens here. In terms of the positive and negative gamma exposure, 4,200 and 3,900 remain the right and left goalposts respectively. These are the absolute boundaries. We don't see moving above or below these anytime soon. It's worthy to note the transition ranges have dropped. This is an important consideration. I know this is a new term that many of you are not aware of. Transition is where the structures that we watch transition from being put dominated to call dominated on the long side. What this means is overall dealer positioning will change, and when we see the transition ranges drop, we believe that this is short-term bearish and is indicative of loss of the overhead out of the money call speculation. So just be aware of that. For the 0 DTE crowd, which we have a number of folks in the Discord, charm flows are showing 3950 and 4000 as the dominant sensitive strikes. As we get closer and closer to those, expect behaviors, and if we cross those, some pretty different changes go to what dealer response has to be. So just be aware of that. These will interplay with gamma levels and with open interest. So just be aware that these are key levels to watch as we go through the day today. All of that said, the expiries are projected weak for today as well as tomorrow. Tomorrow's extremely weak. So we are expecting a lot of chop and a lot of noise, and it's hard to get directionality out of this. I didn't mention it yesterday, and we didn't really play it up. I did make a post last night on Twitter about this. We did have the roll, which occurred yesterday from the February out to May. Here are the new strikes. Here are the new sizes. Of the three, it's the smallest. It really is a nothing muffin. We don't pay a lot of attention to the smallest one because there are other transactions which are equal in size, not in necessarily contract size, but in delta impact. And so complete absorption, we're not looking into this to be anything of any significance. It may have contributed a little to the sell-off we saw yesterday, but there were other things that we think were converging there that probably contributed. We focus our attention now to the end of March. If this is the baby bear, this is the Papa Bear. And Papa Bear says that 4065 and 4630 are key levels. They're very much dominant and very visible already. They have been. We've been calling them out since they were placed at the end of December. And they're just going to get stronger as we move through time here. So be mindful of these spots, these strike prices. Taking a look at the market model, this is the full picture. You can see the ribbon is trending down. That's the long-term down. You can see this rounding pattern here. The bolded white line is the instantaneous cumulative tick. The railroad track pattern here, or these downward moving averages, are showing also that reversal. And then the new railroad track pattern down, the low, etc. And so we've made this a little more explicit in this picture here, where you can see that we've had a series of down days where the CT closes below the previous close. This actually back tests very, very well. So I would just be mindful of that. One day up and then a reversal day down. This is why I said whipsaw, but your eye should probably see we are rounding a bottom here. Probably not going to aggressively move down. As we go down further here, we're looking here at the railroad track pattern, and again we have this reversal. It turned off 2 days ago, was resuming yesterday, excuse me, and so we have day one of a new downtrend. This can turn off at any time. It follows that same pattern as this, so just be aware that this could be a false signal or at least a weak signal, and I would not get out over your skis. Taking a look at the overall complex, kind of a mixed picture. We have a number of things that are going on here. First of all, we've got deltas on the PM settled complex that are going more positive, less negative. This is constructive for the bulls to a certain degree, but you can see that they're still net negative here. Over here on the combo complex, which is on the right hand side, you can see that we've got the reds are showing, deltas are dropping, and when we see this in the combo, which is in part comprised of this means that the AM settled, or the institution side of the equation here, which is dominant, it's much larger than the PM settled, is actually a little more bearish. And so when we see the deltas trending down over here, but the deltas trending up over here, we want to take note. It's kind of a mixed picture. Just be aware of that. So nothing is clear here. One thing to also take note over here in the PM complex, that COI dropped a fairly significant amount. We normally don't see COI, which is the call open interest. This is the dominant time invariant strike that contains the majority of calls. It was up at 4,200. It's now at 4,000. This is very unusual for the PM complex to do this. When we see that, that means people have taken those calls off the table for whatever reason. Note though that plus GEX is unchanged. This has the time component in it, right? So when you're looking at gamma is a time component or time influenced measurement, and why we believe that GEX is a better measure rather than put call ratios and things of that nature. Just be aware, a change in overhead structure that is more bearish, no question about it. When we don't have those calls positioning higher, it does indicate that the market is starting to position to the low side. Looking here, also, I just want to call out that minus GEX dropped from 3950 to 3900, and also POI dropped, which is the put open interest, much like COI is the call open interest. POI dropped from 34 to 32. When we see this, these are actually short-term bullish, and here's why. We see these levels move up in anticipation of price dropping, and that's where people can play the convexity of gamma. When we see them fall away, those people have either locked in their gains as prices sold off yesterday, or they're speculating, they're buying insurance, and we're increasing the dominance of the strikes here. All of that said, the takeaway from this is we've got a mixed picture on both sides. We didn't see a change over here in the combo complex. This is short term. This is more nimble than the combo complex, and so there's a mixed interpretation here. Don't want to belabor it, but just trying to teach you how we see things here, and as you look at these charts on your own, you're able to infer possible if-then scenarios and outcomes. Taking a look at the PM complex, I think one of the things to just be aware of is that we're seeing kind of the same thing that we saw on the day prior. One of the key things that we want to highlight today is that the 4,000 strike and this 3950 strike is really the dominant sensitive areas for today. You can go down to click on this link here, and it should take you to an interactive chart that you can rotate this and play with it yourself. We are at 39.74, so it's right at the midpoint of these two. Just note, out of the money calls are dominating, so what that effectively means is that they are getting less positive, which is the same as saying they're going negative, which is why you see charm flows to the negative side and dominated by the calls. On the put side here, we're seeing out of the money puts go north. And when we see that happening, they're becoming less negative, which is more positive. Hence why you see the chart that you're seeing here. Nevertheless, as we push up towards this level, we're going to see it grow. As we push towards this level, we'll see it grow. They are support and resistance for today, and we feel fairly comfortable about that until they get violated. If we do cross either of these levels, which is always a possibility, expect dealer reaction to change dramatically. You can already see the emergence of some other strikes here for today, and just want everyone to pay attention to that. These are the sensitive components, and if we push up, these will grow also in magnitude, which could be start to put some downward pressure on the markets too, depending on where we are in the course of the day. Taking a look at the 0 DTE, first of all, transition has dropped. We are seeing some additional strikes, which is positive. We're seeing, for instance, these in-the-money calls start to peer their heads through a sea of out-of-the-money puts. We do like to see, in general, the in-the-money puts vaporizing, since it is a 0 DTE. We like to see those go away. We don't think we're going to get much above 40.10 if we do break 4,000. You can see that for today, the real numbers that are in play here are 39.50 all the way on down to 3900. And you can see some transitional areas here that, throughout the day, the gamma will continue to grow as spot price pushes down. Could be supportive. Watch the COTMP indicator throughout the day for any type of monetization level. We do want to call out here. Your eye should be going up here on the 0 DTE and the 1 DTE, and you can see that we do have a net negative or net put dominated expiry today. That's good as we march through time. We'd like to see the puts come off, which then exposes the calls. So we just need to have more of this in order for the bulls to have any chance. They also need to step up, by the way, and they haven't been doing that. The 1 DTE, extremely weak. Just want everyone to be aware of that. So don't torture the data here to tell you the story you want to hear. To the overhead, it's not a good sign to see calls come off the table. So tomorrow's projection into Thursday is not all that constructive for the bulls. To the downside, though, it is. We're seeing a continued, we saw it yesterday, we're seeing it today, and then tomorrow we're seeing continued out-of-the-money puts expiring off the table. When that occurs, that money either gets redistributed down as puts, speculative puts, or maybe even gets moved up into calls. So we're mindful of the structure and the change in structure. Also want to call out, transition has also fallen here. You can see where the spot price is. So this looks to be the new norm, at least for the next couple days. Seeing that here, of course, in the 0 DTE, the 1 DTE, and then here in the combo, we're right in the middle of it. So we're pretty much locked in, we think. We don't see the ability on the combo. We don't see the ability to push aggressively north at 40.25, 40.30. We do have a node up here, but it has a very strong gamma level. Here's the JPM for 40.65. That's the end of month, now March. Short call strike, and those are, we're going to have to see a lot of calls go in order to neutralize the impact of this. To the downside, 39.50, 3900, and you can see, though, even though we do have a lot of in-the-money calls that are present here, they are slightly weaker. The numbers are down, and we're starting to see a few cracks in the ice. This is not good for the bulls. We definitely want to see this moving up as we go. We want to see these numbers get stronger, and they're not. All of that being said, the combo complex is relatively unchanged relative to where it was yesterday. That's important. Again, we're almost within noise margins here, so don't overread what we're saying here today. Just be aware it's the 1st of March. There's going to be some window dressing, and we may see some weakness, especially with that 39.50, 4,000 charm setup. Finally, the landscape view here, plus GEX at 42, like I said, minus GEX at 39. Little bit, not as clean. I urge everyone to go back to yesterday's view. It was a very clean structure yesterday, not so much today. You can see this 39.65 is a key level. If we lose that, we're back into the negative gamma, below transition ranges. If we can get up over this 39.90, 39.95 and push up into this 4,000 strike, that would be great. Not really anticipating it for the reasons that we've already talked about, but if we do, you can see we're in a very good area here, and I think there is potential. But the bulls really need to step up. You can see compared to yesterday, this is really strengthened to the downside, which is useful to know. We've got a growth here in the put-dominated gamma as people buy that protection and as they take advantage of the potential drops here. So just be aware. We're not showing a lot of bullish path north. The speculators, the out-of-the-money call speculators need to step up. They haven't been stepping up. We're seeing a weakening of the structure to the overhead. Bears are fully in control, and take that as it is. So with that, I'll bid you farewell. If you have any questions, comments, come and join us at GammaEdge.us. Go to this link, upper right-hand corner, pricing tab, fill out the blanks, pick your plan, and come on in. 14-day free trial. All the tools turned on. Follow us on Twitter, GammaEdges with an S, and then here on YouTube, two things. Smash that like button if you like today's content. Yes, we know it's delayed. That's intentional. All this content is provided to the members before the open. So you can always see this stuff before the day starts and help it plan your day. But certainly here on YouTube, we're posting this stuff with a little bit of a delay just to show you the content and the depth of what we're doing here, and we'll go from that. So I bid you farewell. Hope to see you in the Discord. Take care, everyone.